Hello, folks. It's Roland Kim here with the Kim Boona team in Vancouver, Metro Vancouver, top 1% real estate team, and Keller Williams. And so I wanted to talk to you today again about a market update for Metro Vancouver. Today is June 24th, 2024. And as always, your information, your situation is personal and specific. So if you have any questions following this general overview, please reach out to me as specifics are important. All right, so let's jump right into what's happening. And so what this illustration is showing you is the ongoing market trends. You can see that May of last month finished with 2,733 transactions, which was nearly a 20% decrease month over month for the May versus 3,411 transactions in May of 2023. And equally, now we're, 23 days into June. And 23 days into June in the Vancouver real estate market, there has been 1,867 firm transactions. That averages out to about 81.17 per day. Calculate that over the course of the month, and I'm estimating that June's going to finish around 2,435 transactions. And interestingly, it'll be another 19 to 20% reduction in transactional sales for the month of June versus last June. So that trend is continuing. Again, we did talk about this, that in the past, that active listings are dramatically increasing. And in fact, provincially wide for the month of May, the active listings increased 42% year over year for the month of May. And so what you're seeing now is quite a large increase from the lows of 2022, still substantially off the highs there in 2012, but we're in a pretty solid territory of active listings available. This is showing us the sales to active ratio. It's putting us into a buyer's market, a balanced buyer's market, still showing up as a balanced market, but I'd certainly say in the near few weeks, month, it feels a lot more like a buyer's market. That being said, our average price is slightly over $1 million. It did drop a little bit in May of last month, year over year, but the MLS average provincially is $1,001,000 if there was such a thing as an average house in the province. Mortgage forecast. So what we're seeing here is that the mortgage forecast is that we are not going to be dropping all that quickly. We're estimating that by late 2025, so just slightly over a year, we might be around 4%, slightly below 4% on the variable rate. And, around that same price point on the fixed 5-year. I'm personally thinking it's going to be a little bit better than that, but that has been a mortgage rate forecast that just came out today. It's perhaps a little less aggressive on the rates coming down than in the past. Bouncing back, that last slide I think was out of place. Bouncing back to the real estate board and sales prices, we see again, as discussed in May of this year, of last month. So Greater Vancouver had 2,733 transactions. I mentioned that was a 20% nearly reduction year over year. The average price in Greater Vancouver remains just around the 1,345,000 with change. What you see as well here in the Fraser Valley board, the Chilliwack board, that year over year for May of last month, each area certainly saw a year over year negative change. On this slide, we're seeing active listings and months of supply for each one of the boards. As discussed, we have a high active listings in the province. In Greater Vancouver Real Estate Board, May finished with 13,600 active listings. Again, that was a 46.3% increase May over May for 2024 versus 2023. That is now putting us with 5 months of supply, and certainly in the first 3 weeks of June, I have seen that trend continue. And so I would say when the numbers finish in June, we will see a higher number of active listings and a larger number of months of supply. There certainly seems to be in all the main boards, Greater Vancouver, Fraser Valley, Chilliwack board, a high increase of active listings year over year. Unemployment rate is trending up. It's still, well in mid single digits, but it is interesting here where it does appear that a lot of industry is not replacing positions that they may have laid off, or they're a lot slower in adding long-term employees back to, any positions they may have laid off. And so I think this will have a trend impact in the future, because I do think there is over the next few years, probably a more headwind coming on employment and industry hiring. And so we've always been used to a very, very low unemployment rate. This still remains to be a very, very low unemployment rate. However, the trend is interesting, that it seems to be established in an upwards trend. We did in June just come through our first interest rate cut in many years. So we were at 5% for the key interest rate for quite a few meetings. It's been dropped by 0.25% to 4.75. The Bank of Canada has certainly given indication that should inflation remain stable and continue to head towards that 2% target, that we should expect some further interest rate reductions, however modest and slow. So what does that interest rate cut really mean that just happened in June? Well, the announcement directly impacts variable rates and lines of credit, and they're going to go down by a quarter point, or they did go down by a quarter point. Fixed rates, though, they don't go down automatically. Fixed rates, as you probably know, are based on bond yields, and those were trending down previous to the interest rate meeting and reduction. And fixed rates are always still much lower than variable rates in today's market. So the next rate announcement from the Bank of Canada will be July 24th. My prediction is we're going to see another quarter basis point reduction. I think we are trending to ratchet the interest rates down here a little bit over the balance of the year to get some more activity started. Inflation. So this is the long-term graph, the 5-year graph of inflation. I thought it does a great job of illustrating how we're trending around that 2.3% for quite a while pre-COVID, and then it just took off, and interest rates, not interest rates, the inflation rate spiked. And so you can see that it's taken us a while to bring it back down. We're starting to find a little bit more headwinds, but we are, in the 2.7 range has kind of been the average for the last few months. And hopefully that continues to go down, as that will help bring down interest rates as inflation is becoming less and less of an issue. So this is interesting trends. This is national housing sales trend. What you see here is for the entire country. And what you see on this image is the 10-year moving average for sales. And then the red line is the monthly home sales. It's a bit more adjusted. And so, very curious. You see COVID hit nationally, sales skyrocketed, highest number of sales that we saw anywhere previous. And then they've come off, and now we're below the 10-year moving average, but we're not that far below. So it is interesting nationally. Nationally as well, here you get to see the residential sales activities and the new listings. Sales are down nationally across the country. Active listings are up dramatically across the country. So we're starting to see the same narrative. And interestingly enough, for those folks that haven't seen this before, nationally, the average residential price in Canada is $699,000. We see the spike of about $820,000, which happened in May of 2022, and then it pulled back and is slowly grinding up, but again, very, very slowly in the last few months. We also get to see, interestingly enough, here on these national charts is the average price. And what you're seeing is, the only area that really prices went up is the far east coast and Alberta. Those were the areas where in May nationally saw a price increase. The typical places like BC or Ontario that often had price increases had a reduction in the year-over-year price change. And then the chart to the right there is showing you again the HPI benchmark price is an aggregated number that's just kind of illustrating you the different categories of inventory that typically sell, different categories of housing nationally, and how the trend lines have been over the last several years. So in summary, in the Metro Vancouver market and, markets beyond that, very similar, but definitely for Metro Vancouver, sales are down about 20%. And that's the That was the past month. That is the trend here for June. Listings are up about 42%. We have 5+ months of supply, inventory supply. And so although it's a balanced market, I would describe this as a buyer's market. If the buyer goes out there right now, they can often find a good deal. Prices are holding, however. Unemployment is increasing a little bit, and that will be an interesting story as we look back a couple months and years from now. June, we had a rate cut. Likely, in my opinion, we'll have another rate cut in July, and inflation seems to be stable. Last month, 2.7. I think this week we're going to hear what the rate is. So all of you, again, thanks for watching this far, and hopefully you got some content that was valuable. I would really love to have a conversation with you and talk about your specific situation. I love talking economics, housing, and assets, so reach out to me anytime for any of those topics. Roland Kim with the Kim Buna Real Estate Team and with Keller Williams.